Okay, let's run through some section B questions in the paper 2 IGCSE economics, and this is 2016. So scrolling down, section B, first question. Burundi is a country in sub-Saharan Africa. They introduced VAT while lowering corporation tax. There's some figures. The UN has encouraged sub-Saharan Africa to increase their tax revenue in order to have more funds available to spend on reducing poverty. That makes sense. There is, however, a debate about whether imposing more taxes or removing them is more beneficiary for the economy. So you get the feeling that that's going to come in the question somewhere. So firstly, define an indirect tax, 2 marks. There's an example, so you should be using that in your answer. Look at the mark scheme. It's a tax and spending on goods and services. Tax can be moved on to someone else, and the example VAT. So an example is pretty obligatory there for 2 marks. What the examiners say is correctly defined by nearly everyone. Long answers are not required for definition, just be succinct. Okay. B. Explain how a cut in the rate of corporation tax could result in an increase in tax revenue. So a bit of a trick question. What will you think? Looking at the mark scheme, a lower tax will increase profit for firms, lowering their costs of production. This might encourage them to increase output, increase employment, and direct tax revenue would actually rise, your income tax would actually rise, or more spending in the economy, and that may increase tax from indirect taxes. What did the examiner say? B. A few candidates incorrectly explained that corporation tax affected consumer income. So don't get mixed up between those 2 things. However, most were able to explain that a cut in corporation tax left firms with greater profit and lower costs, which could lead to greater output, lower prices, which then would increase government revenue through other tax revenues like VAT. Quite a few candidates also explained that lower corporation tax might encourage new domestic firms to open. Okay, so that seemed to be quite well answered. Next, let's go to C. Using a demand-supply diagram, analyse the effect of removing an indirect tax. Now this is going to trick people out, removing an indirect tax. So diagram, very important. Keyword here is removing. Now a traditional demand-supply diagram should look like this, and tax would usually go from S1 to S, but we're removing a tax, so it's going to go from S to S1. And don't forget, your diagrams should be well labelled. Axes, curves and equilibrium. Ace your diagrams. Your axes, P and Q. Your curves, D and S. Your equilibrium, P and Q. All of those things need to be there to get good marks for your diagram. Axes labelled, demand supply labelled correctly, shifting outwards, S to S1, and then your equilibrium goes from PQ to P1, Q1. Don't forget to analyse. Removing an indirect tax effectively reduces the cost of production, and therefore you'll have a greater supply and lowering of the price. Take away the tax, you're going to have a lower price. Makes sense. What the examiners say? The diagram drawn by many candidates was wrong, as it showed a shift in the demand curve. That's very poor. Tax is on the supply side, on the supply curve. The removal of an indirect tax will shift the supply curve to the right, thereby lowering cost of production. A few candidates showed a shift in both demand-supply curves, not needed. For many candidates, the written comments only explained the diagram and didn't analyse the effect of a reduction of cost of production on lowering prices. So that's your analysis, is that it will make your prices lower. There are no marks for simply describing the diagram. Okay. Key thing there on the diagram was your price was lowered from P to P1 and your quantity increased from Q to Q1. Just by saying that, you're going to get these analysis marks. Okay, moving on then, the last question. Question paper. Discuss whether an increase in tax will reduce inflation. Will is a key word there, because you're going to split it up into it will reduce inflation and it won't reduce inflation. So look at the mark scheme here. It's out of 8. You're going to get 4 marks that it will and 4 marks that it won't. Okay, or you can get 5 and 3, whichever way your answer is. Right, points, 3 points to say that it will reduce inflation. Increase in income tax will reduce disposable income, spending may fall, and this will lower demand pull inflation. Perfect. That's going to get you about 3 marks there on that point. You may want to do another point. Increase in corporation tax will reduce profits for the firms, and this reduces demand for capital goods and investment. Okay, so 2 points would be fine on that side. Also, increased indirect tax reduces spending, lowering demand pull inflation. You should be saying which inflation you're lowering. However, for evaluation, discuss, you need to have 2 points to say it won't reduce inflation. So here we have consumers and firms may respond by reducing savings rather than spending. Higher indirect taxes will increase costs of production and higher prices, actually causing cost push inflation. So you'll get about 3 marks for explaining that. Maybe as a backup, make another point. Higher income tax may encourage workers to press for higher wage rises, thus causing more cost push inflation. So 2 points that it will, 2 points that it won't. Well explained, easily get you 8 marks. What the examiners say. Different taxes have different effects on inflation, so what they were looking for was, do you know the difference between demand pull and cost push? Therefore, general answers did not specify a tax, or they did not specify a type of inflation, so you're going to drop down marks immediately. Most candidates were able to explain that an increase in income tax would reduce income and therefore lower demand, and this reduced demand pull inflation. So everyone was quite able to say that much. Equally, most candidates were able to explain an increase in indirect tax or corporation tax would result in higher prices. That was the other side of the argument, thereby increasing cost push inflation. So this was quite well answered. Good answers, however, also commented on the wage spiral effect. So please specify the type of inflation you're talking about and the type of tax you're talking about. Okay. Hopefully that was helpful. Thank you.